All right, hello everybody. Live today, market looking down 1%. Not looking very good yesterday. Another distribution day. We talked about that occurring. Talked about reducing positions yesterday, not taking new ones today so far either. We'll see how this goes. So yet another distribution day. We talked a little bit ago, a few days ago, I'm not sure it was with you guys or someone in my Slack chat room, but talking about distribution days piling up. Well, there's 4 pretty quick, and a fifth, I guess there's 5 pretty quick distribution days. So this is where things either start to fall apart or start to turn around. It's going to be an interesting market here for the next week or two. Now distribution days, these do fall off, but it can take 13 weeks for them to fall off, so they can hang with us for a while. I don't have my chat up yet because YouTube is laggy. Hey, what's up, Eli? Now I see chat. More patient with what? What are you looking at that you should have had more patience with? Are you looking at Tesla? Did that have a gap down or something? Oh, Tesla's doing... It's not cratering, which is good. Market... Morning, Rob. Looks like market. So I placed a measured move line here yesterday based off of this leg. Seeing if we'd measured move it. Looks like we measured moved it here overnight. Oh, okay. Driving to work when I start. That's cool. Well, thanks for listening. Hopefully it's not a wasted drive to work. IQ getting his butt handed to it today, undercutting that low from yesterday. So far finding support at the trend line. We'll see how that plays out. ZTO further down, undercutting the trend line. Stone NXPI. I think we'll see a short squeeze in Tesla. You're looking for autonomous driving stuff. I really think it's the Model 3 stuff. I mean, that's really the big picture. The autonomous driving, people aren't buying it for the autonomous driving yet. Oh yeah, you're watching a space shuttle retrieval? I want to watch that. That looks fun. Do you have a link for that? I'm getting old videos. They don't really show live videos too much. Oh yeah, there you go, huh? Cool. I read 35,000 models as bullish thing. What do you mean by that, Eli? That's a pretty small space capsule. There's a guy on a dinghy out there, and he's... Well, I guess that means the dinghy's probably about 15... Or the capsule's about 15 feet tall. Funko with another big day. All right, also topping list up 5% today. Well, not so big of a day. It had a big day there. Looks like it hasn't had a big day in about 5 days. GNC, SSYS. So I don't know. I think probably the best you can expect out of this market today is a reversal. If you guys didn't hear, I saw on IBD there were jobs numbers that came out that were pretty pitiful, but wages increased like 3%, which is quite a bit. Economy adds just 20,000 jobs, but wage growth jumps. I guess part of the thing there is how many jobs that we have left to add. We've basically been considered full employment, I believe, now for a while. 0% move, yeah, right. Economists expected 138,000 new jobs, 3.9% unemployment, 3.3% wage growth. January total was revised. Yeah, not a lot in this article gives us any kind of indication, but leaderboard name is still in a buy range. Zendesk on a roll, but could be a takeover target. Top funds place billion-dollar bet on these 9 stocks. Yeah, that'd be a good article. And it's a lot you already know about. Yeah, kind of funny how the market works. Sometimes some of the most obvious ones end up being pretty good. I've got Ring on my screen here. That one's not looking too bad. The question you have to ask yourself is, do you believe the market's going to go up, or at least not start tanking? If it starts to tank, Ring will probably go down with it. Looks like Ring has a few pocket pivots in here. You've got one right here, and you've got you don't really have a pocket pivot right here because of this larger red candle. So pocket pivot here, and so far that's been the low. Now we're gapping up a little bit above this trend line. Not sure if we're exactly on the trend line. Oh, not quite. Not quite yet. Almost there. But it is a gap up scenario. It is also a very... Ring is it trades under 400,000 shares. That's IBD's minimum requirement. Rob asked if I think that this run since December is a dead cat bounce or a turnaround. Well, you know what? It's I don't really that's so hard to call, man, to be honest with you. So we are seeing a little bit more distribution up here. Right, so this is not a dead cat bounce. I don't think it is a dead cat bounce. I think it's a run in the market, and if it ends here, the question is, after we have this next leg down, do we continue running, or do we consolidate it and then fall lower again? I mean, this was a real thing. I made really good money on this run up. Now we'll see how the market behaves on the way down. So a dead cat bounce or not, no matter what label you call it, yeah, I don't know, but it was a beautiful rally. I mean, here's our follow through day. So that's 2 months, 53 days, a little under 2 months of bullish market behavior. Maybe if you look at it on a weekly chart. So it's a little high for a dead cat bounce. Usually a dead cat bounce would stall about here, in my opinion. And like I said, either way, it was a rally. I mentioned in a video probably a couple of weeks ago, I don't really take indexes. I don't treat indexes the same way that I do individual stocks. So I treat indexes in terms of market in uptrend, market in correction, very similar to how IBD does it. I don't really, if the market is in an uptrend, then I will trade normally. If this was a dead cat bounce in a stock, I wouldn't play it to the upside. There's too much risk in that. There's too much risk. But on an index with a follow-through day, you have safety taking positions. And then now that we're getting heavy distribution, I arrowed up all the distribution days here. You end up with a picture that some institutions are taking some profits. And then whether we get back above that or not, it's a whole different issue. But right now, the market's kind of in danger of turning back into a correction after so many distribution days so close to one another. That, I think caution is warranted here. I've got a pretty heavy cash position now as the market's taking me out of some positions. And now just kind of biding my time, waiting, watching, and seeing the best ones. Like Ring is looking really good here. So it's a little disingenuous just to say dead cat bounce or real turnaround. That's like dealing in ultimatums. Only the Sith deal in absolutes. So I'm more of a realist, and while I guess you could say market in correction and market in uptrend is black and white, and I guess it kind of is a little bit. Right now we are in a gray area, and so we just have to kind of wait and see what the market's doing. But I would like to think that in time we'll come back, test the 50-day here, and then we'll consolidate and then end up going higher. I don't really think, this is just an opinion, but I don't think we're going to go back into a deeper bear market. If I'm wrong about that, I'm wrong about that. But as of right now, I don't really see. Well, let's go through some charts from the bottom down. Sometimes you can get a little bit of insight into the market from the leaders of the market. And let's get some leading stocks up here and see. Paycom's a leader. It's holding up here pretty well. Rounding over is not the end of the world. Let's see what IBD. Okay, so actually this article that they put out that I was just reading mentions a few of them. Cyber looking very good. Palo Alto Networks looks like a little bit of topping action right there, filling the gap and then coming down some. That could definitely be some profit taking and a bearish sign. Microsoft holding up okay, but so far failing to get into a new high. You can see it even paused right there at that previous high, rolling over. Volume isn't. You can see the volume here in the bear market was very elevated. We have much lower volumes now on Microsoft. They're not really interested in selling it in tremendous amounts, so we'll see how that does. We can take a look at Apple. So the Apple rally hasn't been great, and we haven't had a lot of selling. Low volume generally, so a little bit less distribution in that name. Facebook. Also, not a tremendous volume in either direction. You can see over here we had the huge gap down on lots of volume here. We had a lot of volume on the way down here, and volume's kind of dried up since the gap. So that doesn't show a lot of bullishness, but we're not really quite breaking down yet. I mean, a danger in Facebook would be an island top. An island top, you see. Here's half of the island top. Picture the inverse on the other side. A big gap to the downside, and then a lower continuation in Facebook. If you see a gap down in Facebook of magnitude, that could be a bad sign. What are some other leaders here? CRM is a leader. It's gapping down, but looks like it's bouncing back a little bit. That is some elevated volume for sure. Coming down off the highs. That was after earnings and then some follow through. That's a pretty big red volume day. Not a lot of price action, however. It looks like they ate a lot of shares. A little gap down today. It looks like it's being bought back up so far. I mean, so far we're seeing chinks in armor, but we're not we're not seeing things dying on the vine quite yet. You know, Facebook runs the risk of an island top, but it's hard to call that. And then you got BABA here, little gap down today. Now holding up on highs here, pretty good. One good distribution candle, nothing crazy. CRM. Oh, that's the one we just looked at. CRM, Paycom, SSNC Technologies. Whoa, what is that? That's a huge day today. That's got to be on the first 5-minute candle. There's no way. Look at that. Someone had some orders down there at 54 to sell, and they went and picked it up. So I'm not sure if that'll clear out a bunch of bears or exactly what's going to happen with that one, but that's interesting. Christian says Ring Energy. No, I think this is. I don't think it's Ring Energy. I think it is the doorbell company. Oh no. This is. What is this? I thought this was something else. Global Gold Miners ETF. Really? Ring as a global gold miner ETF? Okay. I guess that's gold. It's very odd that would be on my watch list. I know of a few things named Ring, and none of them are gold ETFs, so that's kind of news to me. Rob's new at this. My 401k took a good hit in the fourth quarter. Maybe just trying to decide if I should switch to a more conservative setting. So here's the thing with retirement accounts. Usually the best ones, it depends on your retirement account. I mean, really. So let me show you something with retirement accounts. So you're going to end up with, varying options, and you don't really get to select the options. You probably don't get to select individual stocks. If you have Constellation, if you have access to the Constellation Fund, which is a mutual fund, it's a Fidelity Mutual Fund, Constellation Fund. I do like the Constellation Fund in terms of mutual funds. And I also have another thing about retirement accounts is don't be unaggressive. Now, it doesn't mean you have to go all in on emerging markets by any stretch. What I mean by that is don't start putting your money in things that are not going to perform. And unfortunately, we only have history to go by. Constellation Mutual Fund. Constellation Funds, Mutual Funds Center. The Constellation Fund. Darn it. It's not Constellation Funds. It is an individual fund. Constellation Fund. No, that's not a mutual fund. Maybe Morningstar. Morningstar is a pretty decent resource. You have to pay for some of their stuff. You can also find mutual fund stuff on IBD, but they're not going to find this. Constellation Brands. Unless I'm getting the name of this wrong. Constellation Fund. And market's coming back a little bit, 0.75%. keep getting Constellation Brands. Oh well. Anyway, long story short, if you can find the Constellation Fund in your mutual fund list of available mutual funds, you can put half your money in that and then put the rest in an S&P, Dow, or NASDAQ index fund. And just leave it there and forget about it. I really wouldn't worry too much about... Our work has Symmetra. I think I can only pick 5 settings. That is stupid. That is... that's horrible. What is it? Symmetra funds? Symmetra mutual funds. Individuals and families, retirement benefits, blah, 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 blah. Broker-dealer for certain Pioneer mutual funds and an underwriter for variable insurance policies. Great, so they're used to ripping people off. And their website is very dumb. I'm sorry you only have access to these guys. I've never heard of that. Yeah, I've never heard of setting a mutual fund to 1 through 5. That would scare me. So I hope, first of all, I hope you're getting a match on that. If you're not getting a match on that, I would not be investing into that by any stretch of the imagination. If you don't at least have control over what it goes into by just choosing 1, 2, 3, 4, 5, that's like saying, you know what, hey, you know what, I'm going to build you a house. Pick 1, 2, 3, 4, 5, and I'll build you the house. It's like, what? What are you talking about? I'm not going to pick a house by numbers. You're building a really big house, Rob. And you don't want to do that by numbers. This ain't paint by numbers here. This is investing. So if you are getting a match, that's fine. But probably what I would do if I were you is to roll that money out of your 401k and into an individual IRA. That way you actually have control over what you're doing. Instead of... Because look, you don't know if 5 is gold and commodities with a sprinkling of emerging markets. You have no idea what that is. That's, you need some more information. Yeah, that scares me. So yeah, get some more information. Bring in here Monday. Today's Friday, isn't it? It is Friday. So bring in here Monday, and we'll go over it a little bit. But if all you have to choose is 1 through 5, like I said, just think about buying a car or building a house. These are the biggest things you're going to do with your life, and you don't want to leave it to some douchebag on the other side of a number. So you want to be more in charge of your destiny in that regard. Once again, if you're getting a match, I would withdraw money every 6 months or so. And well, not with you don't withdraw it. What you do is you it's like a transfer. I've never actually done that. I've got money in 401k just sitting in the 401k, even though I'm not with the job anymore. But yeah, so you're gonna want to if you don't have a match, stop that plan altogether and invest in your own IRA. But if they do have a match and your settings are and that's really most you have available to you, then you're going to want to change that. Transfer that out of your 401k into an individual IRA, or even a Roth IRA if you can afford to pay the taxes on it. I'll look into it, and if I can set any other parameters, yeah, paint by numbers. Exactly. You don't want to do that with... So everyone says, the biggest thing you're going to do in your life with money is buy a house. That's generally true with a decent amount of cash, but I would say saving for retirement is probably the biggest thing that you're going to do. Hopefully you have more money in your retirement account than your house is worth. I would hope everybody would have that goal. Yeah, we got a lot of more green on our board right now as we're popping up here. How's Carvana doing? Coming back? I never really left. Carvana holding up great, man. This thing is just, for some people, I guess they like buying cars out of vending machines. So weird. I don't know. I don't get that. This seems a little bit like buy car by numbers. 7-day test own. Oh, that's cool. Yeah, the website's cool. Because they actually have a. If you guys haven't been to Carvana.com, go ahead and go to Carvana.com. They actually have a really cool website. And if you go down about 3/4 down the page, they have a car carousel. It's a bit of a gimmick, but they have one down here in Tempe, and they have it right next to the 202 freeway. And it's like, I don't know, 8 stories tall with different cars in it. And you get some big ass key or coin or something, and you put it in, and you get to take your car out. It's kind of a gimmick, but probably works okay. Anyway, their stock looks like it's behaving really well. I mean, you look at the volume here. Look at this volume on the run-up, and earnings is running right up into earnings, and is continuing its run-up. Carvana really bucking the market trend. That's something to take note of. Christian, how do you transfer an employer-based retirement plan? My experience, I couldn't do it till I left the job. No, not at all. It's not something I've actually done, but I believe what you do. It's just some forms you have to fill out. It's basically what it is. Looks like Bitcoin's getting on with the program here. 1% leading, BSV leading 2. Yeah, so I believe what you do. Yeah, transfer from 401k to IRA. You can just Google it and open a rollover account. Ask your 401k plan for a direct rollover. Choose the investments. Bam, there you go. But yeah, it's your money. They'll allow you to take it out. So I'll just copy and paste this if it'll let me. Yeah, it let me. So there's a link for you how to start your rollover. And then, about choosing your provider and stuff like that. You want to make sure that your commissions are small. You don't have to, I don't know if I would go with these guys. I think I would probably go with a traditional brokerage account. And then you have a myriad of options. I'm not saying you trade with your retirement account by any stretch of the imagination. I mean, you can if you're comfortable doing that. But I mean, at a minimum, you can invest in low cost. You can do low cost index funds. And when you're dealing with an index fund, what you're trying to do is you're trying to get the performance of the index, because most mutual funds, like 85 to 90% of mutual funds, actually do worse than the S&P 500. And if you want to do what the S&P 500 does, which was apparently 8.4%, the S&P's average rate of return was 8.4%. Vanguard at 8.27%. The difference equates to the fund's expense ratio. So that's really what you want right there. Is you want to get the S&P 500. So there you go. 95% of active managers fail to outperform their benchmarks on a relative basis over the past 15 years. So if you're shopping for a diamond in the rough fund, you have a 5% chance of finding one that actually shines. That's what I'm referring to right there. So an index fund is really the way to go. If you want to be a little bit more aggressive with that, if you do end up in like a normal trading account like Fidelity or something like that, and you can buy mutual funds in a Fidelity, in an E-Trade, in any of those brokerages. I mean, there's the ticker, VFINX. You can look for brokers that trade mutual funds with zero fees. There are some brokers that do that, so you can do that. And I think they're going to give us some more symbols. Here we go. So here's some more symbols, and you're going to want to look into these. Make sure that make sure that they're make sure that they provide what they say they provide. So look into that. And then something you can do is like my you can take a portion of your account and you can do the TQQQ strategy and try to get that's not what I'm looking for. Trade the TQQQs. And you want to avoid these big drops, and you want to get in on these market run-ups. So you can trade a little bit of there as well. But it's up to you how much you want to put from trading to conservative index investing. But if you're going to be here in the chat room here, I would say you could put like a minimum. If you want to test it out, just do like 5%, 10% in the TQQQs. Now, if you are going to be doing individual investing like that in your retirement account, one thing I'll say is you are going to have fees, probably $5 on minimum, $5 to $8 on each side of the trade. So don't do it with like $100 because you at least have to get a 5 to 10% return just to make a buy and a sell. So you're going to want to do it with a decent amount of capital, at least $1,000. That way you're doing 1% instead of 10%. So Eli's talking about fees. There are brokers with 0% fees. You're talking about shadow fees that can be even worse. Well, those, if you're looking at those ETFs, is that what you were looking at there, Eli? Yeah, some of those, like I said, you have to look into those. I'm not quite sure. So anyway, there's some information for you. But yeah, I would look into those. Look into the historical returns of whatever fund that your 401k provides for you, because you don't want to be stuck in an underperforming fund for 20 years. It just makes no sense. It literally makes no sense. You have a worldwide myriad of options. You have expense percentage. Yeah, so again, you have to know what you're getting yourself into. Most index funds end up with these very, very low fees, 0.03%, 0.04%. Trying to see if there's one I recognize. VT, you can do VTI. I think that underperforms a little bit though. Oh, and here they talk about mutual funds versus ETFs. ETFs have a little bit higher fees. I know the TQQ has a 0.9% fee. VOO. Yeah, see that looks to be a straight S&P ETF. I mean, right there, S&P 500 ETF. Doesn't get any stronger than that in terms of, like, this says total stock market index fund Admiral shares. There's a lot of jargon in there that you don't quite know what that means. Now here's another one, Core S&P 500 ETF. Core is a little weird. I don't know what they mean by that. Maybe they're only holding 100 of those S&P 500 stocks. I don't know. So again, look into the prospectuses. You guys have time. Like I said, you're going to look in and see if you want to move money out, if you have better options within your 401k. But again, if you do get a match, make sure that one thing I didn't mention was if there's any vesting to that match, you may have to vest for 6 months or a year or 2 years or something like that. And call your 401k provider and talk with someone about that. You don't want to be stuck on the wrong side of a bill or something like that. So anyway, there you go. And the Nasdaq giving what little gains it had up, rolling over here a little bit. There's the TQs, 2 gap down days in a row, usually not very advantageous. See a gap down there and a much larger gap down there. We heard about the jobs report coming out today. Qs will be the same. And I'll jump back to the Nasdaq after that. So above the 200-day for a week or two there. Now we're back down below the 200-day moving average on some elevated volume. Actually, you can see the Qs here. At least the Qs. The futures had a little better volume. volume's not horrible here on the Qs. Look at the NASDAQ futures. Yeah, volume definitely more elevated on the futures here. You can see it right there. This is where more professional traders actually trade. They'll trade in futures. I don't recommend trading futures unless you're an experienced trader. Similar to options, in a way it can be worse. The leverage, I believe, is depending on what future you trade, could be a little bit higher. 806. So I gotta run, guys. If you guys have any last minute questions, spit them out there. But right now you're taking profits. You're basically being a little more defensive generally at this stage of the market. We're loading up on distribution days, so I really wouldn't be taking a tremendous amount of risk at this stage of the game. So, all right, guys, I'm gonna get out of here. Have a good day. I'll see you on Monday. Bye-bye.